Teaching how businesses operate in a competitive market system often defaults to textbook reading and passive lectures. The boat-making game replaces that passive learning with an active market simulation, dropping your students directly into the pressures of a working economy. Over the course of a 40-minute activity, your students will learn the mechanics of supply and demand, cost control, and cash flow management by actually experiencing them in real time. To run the simulation, you need to gather specific physical materials beforehand. You will need play money in denominations of tens, 50s, and hundreds. You also need stacks of blank A4 paper, copies of 3 distinct handouts for each group, and a prepared deck of chance cards. Having these materials organized and ready before the bell rings is essential. Proper physical preparation establishes the boundaries required to turn a room full of energetic students into a functional, self-sustaining microeconomy. This schematic shows the required physical layout. Arrange 4 separate desks at the classroom front. Assign these as the bank, raw materials supplier, and 2 buyers. Group remaining student desks into distinct manufacturing pods of 5 to 7 members, representing competing businesses. Select 4 reliable students to man the administrative desks at the front. Brief them clearly on their duties so they can execute transactions quickly without needing constant intervention. Physically separating the buyers, supplier, and bank from the manufacturing floor creates distance. This physical separation forces the students to leave their workstations to conduct their business, accurately mimicking the logistical bottlenecks of real-world supply chains. Distribute Handout 1, which provides the background information on the market, to every team. Then hand out a copy of Handout 2, the General Journal. Instruct every team to nominate 1 member as their accountant. This person holds absolute responsibility for recording every financial transaction in the General Journal. Failing to maintain accurate books will lead to immediate failure during the endgame audit. Give each team 10 sheets of A4 paper, along with Handout 3, which details the exact procedure for folding the boats. Start a timer for 15 minutes and let the teams practice their folding technique. This practice phase is critical. Students must build muscle memory and master the physical production process before the simulation begins. Once the market opens, mistakes will cost them money. The simulation spans a fictitious period of 4 weeks. In reality, each of these weeks is strictly governed by a 10-minute timer. When you are ready to begin, instruct 1 member from each manufacturing team to visit the bank and collect their opening balance of 200 Rand. This flowchart outlines the recurring manufacturing cycle. Step 1 requires teams to visit the raw materials supplier and purchase blank A4 paper at a fixed cost of 50 Rand per sheet. They return to their desks with the paper and begin the production phase, folding the sheets carefully into completed boats. Once a boat is built, a team member takes it to either of the 2 buyers. The buyers inspect the product and pay anywhere between 50 Rand for a poorly folded boat up to 80 Rand for high-quality manufacturing. The team representative must return to their desk and hand the revenue to their accountant to record in the ledger before they are allowed to purchase more raw materials. This relentless 10-minute cycle forces students to make hard operational choices. If they fold too quickly, buyers will penalize them with low prices. If they fold too perfectly, they won't produce enough volume to cover their costs. When the initial 10-minute timer fully expires, clearly call out the end of week 1 loudly. All manufacturing and trading must immediately pause. It is time to pay overhead. Every single team member must be paid a flat salary of exactly 10 Rand. The team's accountant deducts this total from their ledger, and a representative physically deposits that cash back at the bank. Next, inject sudden market volatility into the room. Require 1 member of every team to draw a single chance card. These cards contain unpredictable events, like equipment failure or sudden market booms, that force the business to immediately deduct or add funds to their ledger. By combining fixed, inescapable salary expenses with unpredictable chance cards, the simulation actively punishes teams that spend all their revenue on raw materials. They learn through immediate consequence why businesses maintain cash reserves. At the end of the 4th 10-minute week, announce a hard stop. All trading, folding, and transactions cease immediately. This formula calculates final standings. First, teams subtract 100 Rand from their cash balance for factory rent. Next, penalize overproduction. Instruct teams to count unsold inventory on their desks. Deduct 5 Rand for every unsold boat. Subtracting both gives the final profit. Review the ledgers, verify the math, and announce the winner. The team with the highest final profit after all deductions takes the victory. Use the remaining class time to review the outcomes. Ask the winning team to explain their pricing strategy, and have the bankrupt teams identify exactly where their cash flow dried up. The true value of the simulation is in this debrief, where students connect their operational choices to their financial survival.